show you love my God first out. Yeah. He's name special for your stuff. Yeah. He's name scala so that's. He's name scala so much.
Hello everyone. So as you guys see from our markups that we posted the other day on our channel, we was looking at Nas for a buy. It was waiting for the pullback so therefore we could enter. And if you guys remember in the video, I did enter a little bit early, but I want you guys to look carefully at this chart. So right here at my stop loss, you guys see that not once did a candle close below my stop loss, right? It literally kept spiking out right at my stop loss, and then it decided to shoot up. And it's very, 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 very strange to me. So in this episode of Let's Talk About It, let's talk about, does the market know where your stop loss is when you are trading? So does the market know where your stop loss is? It's a very valid question if you've been trading for a while and you've seen the market not once, not twice, but multiple times hit your stop loss and then take off in a direction that you were expecting it to go in. So it's pretty much what happened in my analysis. As you guys saw, like as soon as it hit my stop loss and it kept spiking out at it, it shot up. But the question that we ask ourselves, the question that pretty much frustrates everyone, and I'm gonna be honest, it still frustrates me to this day. Does the market know where my stop loss is? And the answer is maybe. But let me dive deep into what I mean by that. So you guys, we all have brokers, and I'm pretty sure we've all been with brokers who can manipulate the market at times. And you guys saw my experience with one earlier on this year when I was trading binary options with VOD. I spoke about last second spike ups right before my trade expired, and I look at TradingView and it didn't happen. Well, that is an example of manipulation, and that happened a lot of times where the market would spike up in and out of profit as the trade comes into the final 10 to 5 seconds of that expiration. And it's like, that's strange. It's very weird. But the other reason that I say maybe is because we could be placing our stop loss around liquidity zones. And liquidity is where buyers and sellers hold their positions or orders in the market. Is where a multiple, even banks and stuff, can build up order blocks and liquidity zones to where the market fluctuates in between that price in and out of their price range, and it causes the market, it's just building up buyers before it actually take off, or building up sellers before it takes off. So a lot of the times we do put our stop loss in that area. And the way to fix that is, moving it a little bit outside of it. But how far should you move that stop loss outside of a liquidity zone before you start to risk too much? And that's something that a lot of people struggle with. A lot of people, are scared to risk a lot of money. And something that I've picked up on or learned is when you first enter a trade, you don't always have to set your stop loss immediately, right? So if you feel like you are being manipulated or anything like that, then don't set a stop loss as soon as you enter the trade. Have a mental stop loss in your mind for how much money you want to risk, how many pips you feel that the market should draw down before you feel like, okay, it may reverse. Maybe I need to get out of this trade. You can do things like that. So a lot of the time, people enter the trade without setting a stop loss. first. And then when the trade, you know, starts to maybe go in their direction, they may set a stop loss then and let the trade rock and stuff like that, which is something that I've done a couple of times. But you want to be very, very careful. You do not want to do a trade like that if you're not going to be looking at the charts, analyzing it all day, and paying attention to what is going on. You also do not want to do that if you do not understand candlestick analysis. So if you do not understand candlesticks, and what I mean by that is being able to read a candlestick, knowing where it's wicking out, knowing how to read a candlestick to know if it's about to reverse or entering a specific zone, how it should react or how the candle should start to look in order for it to go in your favor. Like, let's say you take a trade as it exits a supply or demand zone, or it's bouncing off a support and resistance, and you do not understand how to read a candlestick once you get in those zones, or know, okay, I know if I get like a bullish or bearish engulfing, that's in my favor, or I get a doji and then right after I get an engulfing candle, and then this trade could go in my favor. Sorry for that, but that's what I mean by candlestick analysis. Also understanding candlestick patterns, knowing, okay, maybe let's say I get a big red candle, a bearish engulfing candle, and then right afterwards I get 3 bullish candlesticks that makes up for that whole engulfing candle. Okay, what could happen after that? Understanding candlestick analysis to that point. So that's why I say you shouldn't do that unless you really understand how to read the market, how to read candlesticks and adjust. Like I always say, we're not predicting the market, we're reacting to it. We're adjusting to how the market moves. And if it's hard for you to adjust, if you get stuck on a certain price, or you have troubles with holding your losses too long, more importantly, that is going to hurt you more so than help you in this instance. So if you're one of those people that you know you hold your losses for too long, do not try that, please. But protect your account. It's about how long you can stay in the game. Protect your account. So that's why I say maybe, maybe the market knows where your stop loss is. And some brokers can cause manipulation to where it can stop you out and then go in your direction. Now, in my trade, I don't think that the market did cause manipulation or anything like that. I think I did just set my stop loss around the liquidity zone, because as I was watching it and I was picking up, okay, this is setting order blocks. Like, the market was setting order blocks in the area. It wasn't a bad analysis at all. It was actually a great analysis. But I should have set my stop loss a little bit lower than where I had it, so therefore I could be more on the safe zone. So that's why I always say set your stop loss outside of a supply or demand area. But in that case, as you guys saw right there, I wasn't in a demand area or a supply area. I was kind of in between, but I knew that the market was getting ready to buy up. So that's why I said it the way I did, which at that point it kind of was outside of the 50 EMA, but I probably should have set it a little bit more to 200, like further down towards the 200, because I know if it gets towards 200, then more than likely there's going to be a reversal. But that's some solutions to create or fix that problem of setting your stop loss too close, or how to avoid getting stopped out. Also, a tool that I used to use was the ATR, the average true volume. So that is something that can definitely help you learn how to set your stop loss. And what it does is it tells you, or it calculates the average pip movement within that certain time frame from candle to candle. So let's say you're trading on an hour candle and you're trying to see the average range from 2 candlesticks, then it's going to tell you how many pips that market has moved in between, or the volume of those pips in between the last 2 hours. So let's say it moves 20 pips or whatever. Let's say it moves 20 pips, and then you're about to enter a trade. Well, let's say you set your regular stop loss. You'll set your regular stop loss, and then you'll add 20 more pips to it. You get what I'm saying? So you will add however much the range is to your stop loss, and then that will be your new stop. That would now be your stop loss for that trade, so therefore you can avoid getting stopped out, and then the market shooting up in your direction. So that's another solution as well, and I could make a video on that as well. I may be leaving out some information, but those just small things that I picked up on over time, and that's to answer the question: does the market know where your stop loss is? It's a hard maybe, depending on your broker. But if you guys enjoyed this video, definitely leave a like, comment, and subscribe. And I'm gonna see you guys in this video, man. I'm out.